Shall we continue now? Friends? Yes or no? Okay. So next important section 35 AD. 35 AD says, don't talk. 35 AD says that if you are an assessee engaged in any of the 15 businesses which are specified under section 35 AD, operations of those business are commenced on or after the specified dates. So, in your ICI study mat, the name of 15 businesses are given. How many businesses?
15 businesses.
And the date of commencement of this business is also given. If you commence these businesses on or after the prescribed dates, then for these type of businesses, whatever capital expenditure you have incurred, other than 3, land, goodwill, financial instruments. Other than 3, land, goodwill, meaning whatever asset you buy, other than goodwill, other than land, other than financial instruments, the cost of all those assets will be allowed fully as a deduction, whether the asset was acquired on or after the commencement or even before the commencement of business. 35 AD done. Only this much is there. Simple. Any of those 15 businesses you have to start. Any of those 15 businesses you have to start. When you have to start? When the operations has to be commenced on or after the dates prescribed. Names of those businesses and the prescribed dates. ICI study mat. Yes or no? Hello? I'm not supposed to, teach you those names. Those names you are supposed to see and you have to remember those names. Few names are hotel business, having 2-star or above category. Hospitals, 100 or more beds capacity. Yes or no? Warehousing of agricultural produce. Warehousing of sugar. Manufacturing of fertilizers. Yes or no? Cross country natural gas pipeline. Then cross country crude oil pipeline. There are 15 businesses like this. So any of those businesses you are doing, commence those businesses on or after prescribed dates. So before the commencement at any time, not 3 years. 3 years was there in section 35. Here, prior to commencement at any time, the capital expenditure was incurred. That entire capital expenditure will be allowed under section 35D in the year in which the business is, provided that is capitalized in the books, in the year in which the business is commenced. Yes or no? And after the commencement of business, whatever capital expenditure is incurred, whatever asset you have acquired, the entire cost of that asset, entire capital expenditure will be allowed in the year in which the expenditure is incurred. Will you remember this? Hello? But there are few conditions. There are few which you need to satisfy in order to take this deduction. But remember, all the capital expenditure, cost of all the assets will be allowed under section 35 AD other than these 3 assets: land, goodwill, financial instruments. Okay. Now, if you claim any capital expenditure under section 35 AD, then remember that capital expenditure cannot be allowed under other provisions, and that capital expenditure, on that you will not be able to claim depreciation. Okay. Next one. Deduction under section 35 AD for any capital expenditure will be available only if for that business, only if For that business, you are not claiming 10AA deduction and you are not claiming chapter 6A deduction given in part C. Given in part. So part C, 80 IA2 80 RRB deductions are there. 80 IA2. For example, you are doing one specified business. Business A. Now for that business, you can get deduction under section 35AD also. For that same business, you can get the deduction under 10AA also. And for that same business, you can get these deductions also. So if you are claiming 35AD deduction for this business, you can claim it only if for that business you are not claiming 10AA and part C deduction of chapter 6A. Claim any one of them. Meaning, if you are claiming this, then 10AA and chapter 6A will not be available. Or if you are claiming 10AA, then this and this will not be available. Or if you are claiming this deduction, then this and this will not be available. That means there are three types of benefits which are prescribed for these type of business. Take whatever benefit you want. Now, if 35AD is more beneficial to you, take 35AD. Then forget about 10AA and chapter 6A, part C deduction of chapter 6A. Yes or no? So all these deductions cannot be claimed together for a single business. Getting my point? Next one. Proviso to 43.1 will be applicable here also. What is proviso to 43.1? I am not going to explain now. Yes or no? Next one. For this business, you will have to compulsorily maintain the books of accounts and get them audited. So for this business, separate books of accounts must be maintained, compulsory, and you are supposed to get them audited also. Now, this business shall not be formed by splitting up or reconstruction of any business already in existence, meaning that this business has to be started newly. Fresh business operations has to be started. Already the operations were there. You are doing those operations on the name of a, on the name of a company. Now what you are doing? You are forming a new company and transferring this entire business to the new company and saying that I want to claim 35AD deduction. You are not going to get it. Why? Because the operations were already started. You have not started these operations fresh. Yes or no? If you want to claim the deduction, the operations must start fresh. The business should not be formed by splitting up or reconstruction of any business which is already in existence. Yes or no? Now operations of such business shall commence by installing new plant and machinery. If you want to start this business, in this business you have to install new machines. Entire business has to be a new business, fresh operations. And in this business, whatever plant and machineries are installed, all those plant and machineries should be new plant and machinery. Now, for example, I start one business, specified business. To start that business, I acquired and installed machineries worth 100 lakhs. How much? So they said that whatever machineries, plant and machineries I have acquired and installed to commence this business, yes or no? All the plant and machinery should be new plant and machinery. Meaning, can I acquire a second-hand plant and machinery to start the business? Can I acquire and install second-hand plant and machinery for this business? Yes. Up to 20% of total investment in plant and machinery is allowed in second-hand plant and machinery. So, for example, 100 lakh plant and machinery was required to start the business, to commence the business operations. Yes or no? So, out of this 100 lakh of plant and machinery, if all the 100 lakh is new plant and machinery, very good, eligible for 35AD deduction. 10 lakh rupees second hand and 90 lakh rupees new, very good, because the second hand is within the limit of 20%. What if the second hand is dot 20 lakhs? Then also very good, up to 20% is allowed. What if the second hand is 40 lakhs? You cannot claim the deduction under section 35AD. You had to commence the operations by installing new plant and machinery, and in that we allowed you that at the most maximum 20% second hand is allowed, but you installed more than 20% worth of second hand plant and machinery, hence you are not eligible for 35 AD. Now pay attention. Huh? How much is the total investment? Total investment in plant and machinery to commence specified business was 100 lakhs. How much? Out of this 100 lakhs, new and second hand. New and second hand. In second hand, 40 lakhs is there. New is 60 lakhs. Tell me whether you will be eligible to get deduction under section 35 AD. Why? Because second hand is more than 20% of total investment in plant and machinery. What is the total investment in plant and machinery? 100. 20% of that? 20. So second hand should not be more than 20 lakhs. Getting my point? But wait. Out of this second hand, if some plant and machinery is imported. Imported means purchased from outside India, and on which no deduction was given to other person under Income Tax Act. So this imported plant and machinery, which is second hand only, yes or no? But for this imported plant and machinery, no deduction was allowed in earlier years to other persons. This second hand up to any limit is allowed. This will not be treated as second hand, this will be treated as if it is new only. So to calculate that 20%, don't count this second hand. Any other, what did I say? Any other case, the second hand plant and machinery is there. You are supposed to see this amount only. Getting my point? Now if this is 15 lakhs, how much? And this is 25 lakhs. This is, now tell me, are you eligible to get deduction under section 35 AD? Yes or no? Because you have to count only this. Is it more than 20% of total investment in plant and machinery? No. Then you are eligible for section 35 AD. But if this was 25 and this was 15, then are you eligible or you are not eligible? You have to count this to check that 20% limit. So 20% of total investment should be 20 lakhs. So second hand plant and machinery should not be more than, is it more than 20 lakhs? Yes. Sir, why you did not check this? Because this is considered as if it is new only. Second hand imported plant and machinery should not be counted. Any value of second hand imported plant and machinery is okay. But other than second hand imported plant and machinery, any other second hand plant and machinery is there, up to 20% of total investment, it should be there, not more than that. Getting my point, everyone? So this was your next condition. Second hand plant and machinery can be installed maximum 20% of total investment in plant and machinery. If the second hand plant and machinery is imported from outside India, then any value of that plant and machinery is okay, no problem. Yes or no? Now let's come to one very important discussion for section 35 AD. See, if the question can be coming in the exam, especially on section 35 AD, no, independent question, then it will be on this concept which I am going to discuss now. Okay, now pay attention. If any asset is there which you have acquired for specified business, the actual cost of that asset, meaning the capital expenditure on that asset, was allowed under section 35 AD. Now you have to promise one thing to the government. Before taking this deduction, the deduction is allowed based on a condition. One more condition is there, that you have to promise that whatever cost of this asset we are allowing under section 35 AD, this asset has to be used in that same specified business for a period of at least 8 years. This is the promise you will have to make. How many years? So for example, if the asset was purchased, in previous year 24-25. This is the year in which the asset is purchased. Okay. So the year in which it was purchased, from that year, with effect from this year till 8 years, the asset has to be used in the same business, same specified business. Only then the cost of this asset will be allowed under section 35 AD. So you promised that no, mother swear, I will use the asset in the specified business only. How much was the cost of the asset? Example, 100 lakhs. 100 lakh was the cost of the asset. This was allowed under section 35 AD in the year 24-25. Thinking that you are going to use it in the same specified business for 8 years, including this year. Yes or no? Now, what happened? In previous year 24-25, this year the asset was used in that same specified business. Previous year 25-26, this year also the asset was used in that same business. Previous year 26-27, the asset was still used in the same business. Likewise for 8 years, including the year in which it was purchased and put to use. In that year, including that year, the asset has to be used for 8 years. Yes or no? Now for example, in 26-27, you were supposed to use that asset for same business, no? What happened in this year? You know what happened in this year? You started using the asset. Asset shifted. Asset from specified business for which it was acquired to any other business of the assessee. Possible? So the asset was acquired, say for example, the asset was acquired for your business A. Business? So in that same business, it should be used in 24-25, 25-26 and 8 years. Yes or no? But in this year, asset was taken from your business A. From business A, it was taken out. And it was, the assessee started using it for other business. For example, business B. Did you keep your promise or you broke your promise? Did you keep your promise or you broke your promise? You said that allow me the deduction, I will be using the asset in the same business for 8 years. But within 8 years, in the third year itself, you started using the asset for business other than the same business for which you acquired it. Yes or no? So, if you break the promise, there will be one section applicable, 37 AD subsection 7B, B for breaking the promise. And the promise was done, this promise was done in which section? 35 AD subsection 7A. The promise was done. Promise was done in which section? Meaning the condition for using the asset for 8 years is given in 35 AD 7A. If you break this promise, 35 AD 7B will be applicable, which says that entire actual cost of the asset which was allowed as a deduction, how much? 100 lakhs minus the depreciation for those many years for which it was actually used in the specified business. How many years it was used in specified business? 24-25 and 25-26. Yes or no? If the cost would not have been allowed in 24-25, then definitely this cost would have been given in the form of depreciation for 24-25 also and 25-26 also. Getting my point? So reduce the depreciation for the previous years for which it was used in what? Specified business. So tell me, for how many years it was used? 24-25 and 25-26. So on this 100 lakh, assuming that the rate of depreciation was 10% SLM basis, sorry, 10% WDV basis. Okay, no? 10%. Asset was building. Asset was. So on building, what is the rate of depreciation? 10%. Yes or no? So 10% for the first year? 10 lakhs. Assuming that the asset was used in the business in that year for 180 days or more. If in that year the asset was used in the specified business for less than 180 days, then in that year the depreciation for full year would not have been allowed. It would have been allowed for half year. We are assuming as if the year in which the building was acquired, in that year the building was used for 180 days or more. So 10% full rate. So 10 lakh for the first year minus you will get 90 lakhs. On that 90 lakh also you would have got the depreciation for the second year amounting to 9 lakh. So this 19 lakh anyways we were supposed to give you in the form of depreciation. If you would not have claimed 100 lakhs, we would have allowed 19 lakhs out of this 100 lakhs. Yes or no? That means excess is how much? That excess you have lied to us. You have lied to us and claimed this excess amount under section 35 AD. Deemed PGBP income. In which year? In the year 26-27, this amount will now be treated as your deemed PGBP income. For which business? This will be treated as your deemed PGBP income for which business? The business in which the deduction was taken. What was that business? Specified business A. So this will be treated as your deemed PGBP income for your specified business A. For which year? Previous year 26-27, the year in which you started using the asset for any other business. Got it, sir? Wait. Now where is this asset? Where is this asset? Is this asset still with you? Yes, but it is now in your another business. Business? So you have taken this asset to business B. Now in business B, block of building is already there. Depreciated at. Don't you think now this asset will go to business B in the block of building? Yes or no? So in your business B, if you have started using the asset, so in the previous year 26-27, now the asset is coming in business B, and in business B there was a block of building depreciable at the rate of, in that block already some opening value was there. Yes or no? Now in that it will be an addition. That building coming from specified business A will now be added in block of building in business B. Now this addition will happen, this one building coming at what actual cost? Apply some common sense. Out of 100 which was allowed earlier, 19 is allowed in the form of as if it is allowed in the form of depreciation. So 81 lakh cost was reversed there. Now that 81 lakh cost will come here. That 81 lakh which was already considered as your deemed PGBP income in specified business A, will now be treated as your actual cost of the asset in the business B. Now, this amount will be allowed in small parts in the form of depreciation with effect from 26, 27 in business B. Got it? Hello, sir. Explanation 13 to section 43(1) and the proviso to that explanation which I left now, this only. What will be the actual cost of this asset? Did you buy this asset for this business? No, it was bought for another business, which was a specified business. For that business, if the asset was bought, and for this asset 35AD subsection 7B was already made applicable, and the amount of the actual cost minus depreciation is already considered as deemed PGBP income there. So whatever amount which is considered as deemed PGBP income, whatever cost which is already disallowed there and considered as deemed PGBP income there, will now be treated as actual cost of this asset, and this amount will now be claimed in the form of depreciation. Will you remember this? Pay attention. Now, asset for specified business, actual cost is allowed under section business A. Business A, actual cost was 100 lakhs, which was allowed under section, must be used in that same specified business for at least 8 years from the year in which it was used for the, but within 8 years. What did I say? If the above asset was later on used by the assessee for any business other than, meaning specified business B, then 35AD subsection 7B will be applicable. What was the actual cost already allowed? 100 lakhs minus the depreciation on notional basis for those many years for which it was used for specified business. How many years it was used? 2 years. So for those 2 years, the depreciation will be reduced on a notional basis. 10 lakh plus 9 lakh, 19 lakh. How much is the balance amount? 81 lakh. That 81 lakh will be treated as deemed PGBP income for which business? Specified business A. Yes or no? Now that same amount will be treated as actual cost in the business in which it is now being used, and now that amount of 81 lakhs in business B will be treated as actual cost, and that amount shall now be allowed as depreciation. Same thing, no, which I explained, written here. Got it, sir? Should I move ahead? Now pay attention. Asset was used for, actual cost was 100 lakhs. Allowed under section? Later on, used in any other business within 8 years or after 8 years. Within 8 years it is not allowed. Within 8 years it is, then 35AD 7B will be applicable. Yes or no? But what if you have used for full 8 years in that same business, and now that asset is no more required in specified business, so you took it from specified business and you started using the asset for any other business. Now tell me, what was your specified business? Business A. How much was the cost? 100 lakhs. That 100 lakh was allowed under section. 100 lakh was allowed under section. Now later on, within 8 years, first year, second year, third year, fourth year, within 8 years? No. After 8 years. What did I say? Can I say after using it in the business for 10 years? In the 11th year. What did I say? 11th year, this asset I started using for other business. Business B. Tell me, 35AD 7B will be applicable? Will not be applicable? Will not be applicable. That gets applied only if the asset is used in other business within a period of, but I am not using it within 8 years. After 8 years, after completion of 8 years of that asset in the business, I am taking that asset to other business. Now tell me, if 35AD 7B will not be applicable, meaning the entire cost which was allowed will remain allowed. It will remain safe, and nothing out of that will be considered as a deemed PGBP income in your specified business A. Getting my point? Meaning entire 100 lakhs allowed. Nothing is reversed. Entire 100 lakhs allowed and nothing will be reversed. Now tell me, in business B, when the asset will come? After 10 years. In the 11th year, in the business B, when the asset will come? At that time, in business B, the asset will come at what cost? Why nil? In business B, block of building is there. In that block, now you'll add this building, no? At what cost? 0. Because the entire cost of this building is already allowed. And nothing out of that cost is reversed by applying 35AD 7B. Getting my point? So entire cost is allowed. Now what cost of this asset should I take for business B? Nil. Because the entire cost is allowed. This is explanation 13. But if it was used within 8 years, so the cost which was allowed, out of that cost, some cost was reversed. 81 lakh was reversed. So that 81 lakh should be now treated as what? Actual cost. Proviso 2, explanation 13. Getting my point? Hello? Will you remember? These things can be asked in the exam. Exactly same thing which I have discussed now, they will put in theory form. 2-3 paragraphs they will create. They will create a story, and if you read that story and you don't recollect whatever I have taught you today, no, 100% you are not going to get a single mark. And the moment you will read that story and you remember today's lecture, that exactly same things sir was saying at that day, what sir was doing that time? Oh, the asset was used in specified business A. In the question it is given unit 1. Cost of asset was 100 lakh. In the question it is given only 10 lakhs. It was used for 2 years. In the question it is given that it is used for 4 years. Only these small informations will be changed. Bloody everything will be same. So now to sum up, pay attention what I am doing here. If asset acquired for specified business A, let's take an example, yes or no, is used in that same business for, come on tell me, less than 8 years, greater than equal to 8 years, less than 8 years, and later on, and transferred to, not transferred, I will write used within the period of 8 years in any other business. Can I say business B of the assessee? What will happen here? Tell me. 2 effects. Business A. In business A, what will happen? Actual cost which was allowed. Here, section 35 AD 7B will be applicable. Yes or no? Actual cost allowed under section 35 AD. minus depreciation for the period of use in specified business A. Yes or no? This depreciation will be reduced. The balance amount will be treated as deemed PGBP income in your business A. Got it, sir? Now in business B, where the asset is taken, in the business B where the asset is taken, in business B, this same amount which was given under section 35 AD 7B shall be treated as actual cost of that asset, and this actual cost of that asset, amount considered under 35 AD as deemed PGBP income, will be treated as actual cost to be claimed in the form of depreciation with effect from previous year in which it was brought in business B. Got it, sir? Same thing? Hello, sir? Now tell me, 8 years or more and used after the expiry of 8 years in any other business B of the assessee. Business A 35 AD 7B applicable, not applicable, and in business B the asset will be taken. What will be the actual cost? Nil. That's it. Got it, sir? This type of question can come for at least 6 marks, and the answer you will get in just 2 minutes. Read the question, immediately this thing clicks. Within 2 minutes you will get your answer. Just presentation will be required and you will get cash 6 marks. Okay? So, done with this part. Now wait. I will put you in a little more trouble. Asset acquired for specified business. Let's say business A. Transferred. What did I say? Without being used for any other business of the assessee. Without being used for any other business of the assessee, it is transferred. What is the meaning of this? You bought the asset in business A. Did you take this asset in another business? No. From business A only you transferred it, you sold it. Possible? When? Within 8 years? Any time. 8 years requirement is not there. See the color, red color, entire discussion is different, huh? Now color, green color, this discussion is different. Now the asset acquired for for specified business, the cost of this asset was 100 lakhs. This entire cost of 100 lakh was allowed under section 35 AD. Now this asset which was used in specified business, business A, from that business itself it was transferred, it was sold without that asset being used by the assessee for any other business. If it was brought in the other business of the assessee, then what is the discussion we have already done? Yes or no? But from that business, specified business only, if it is sold without being used for any other business of the assessee. Now tell me, it can be transferred at any time, at within 8 years or after 8 years will not make any difference. At any time if it is transferred. Now tell me, on transfer, on any sum, whether in cash or in kind, whether received or that sum will be taxable as income under the head PGBP only. Do you remember? Yesterday only we have done this thing. I have taught you specific charge. Have I? All these specific charge incomes I have shown. In that second last income was this. I told you with 35 AD I will pick this. You must not remember, I know. I know. You must not remember. You will not believe me also. That no, this fellow is lying to us. He is trying to fool us. What is this, sir? Sir, madam, what is this? Did I teach you this compensation and all? Yes or no? What is this? In section 28, there is one clause. Amount received or receivable in cash or in for transfer of whose cost is any amount received or receivable, whether in cash or in, that entire amount will be now treated as your PGBP income. Whenever you transfer within 8 years, after 8 years is not relevant. From that asset, specified business, from that business, that specified asset is transferred. On transfer, whatever amount is received or receivable, whether in cash or in kind, full amount we want to charge under the head PGBP. Now my question will be, how much amount was allowed? How much amount was allowed? 100. And on transfer, how much sum you are receiving? 80 lakhs. What will you do with this 80 lakhs? Taxable under the head PGBP. Hello, taxable under the head. If the sum received is 100 lakhs, what will you do? Taxable under the head PGBP. What if the sum received is 110 lakhs? $100 lakhs PGBP, balance 10 lakh. Don't do that. That is why there is a specific charge. Whatever sum, whether up to the cost, below the cost, more than cost, any sum which you are receiving will always be taxable under the head not to the extent of cost allowed. Any amount, even if the excess amount is coming, that will not go to capital gain. Entire amount will be taxed under the head PGBP. Full stop. Will you remember this? This was your section 35 AD. Done, sir. Now let's come to the other part. See, after 35 AD, no, now all these sections are very easy sections. Okay, no? Now 35 CCD is not there in your syllabus anymore. Forget about this. This 35D, no, read this section once. Okay, I'm not going to waste my time in this section. Preliminary expenditure are allowed as a deduction, and remember, the preliminary expenditure must be eligible preliminary expenditure which are covered in point number A, B and C. Yes or no? If any of these preliminary expenditures are incurred by you, these deductions will be allowed to you as a these expenses will be allowed as a deduction, but subject to maximum limit. So how much is the limit? Sir, limit is 5% of cost of project, 5% of capital employed, whichever is higher, if the preliminary expenditure are to be claimed by Indian company, and if the preliminary expenditure is to be claimed by any person other than Indian company, but he has to be a resident person, then for him the preliminary expenditure will be allowed to the extent of maximum this limit, which is 5% of cost of project. What is cost of project? All the assets plus the long-term borrowings, both taken together. So that is cost of project. What is capital employed? Paid up share capital plus long-term, cost of project is only the value of asset. Cost of project is only the value of asset. Capital employed is paid up share capital plus long-term borrowing. Paid up share capital plus. So cost of project, capital employed. Cost of project, 5% of that, 5% of that, whichever is higher, and here cost of project 5%. What is preliminary expense? Simple. Any expenditure which you incur to start a business or to expand a business. But that expenditure will be allowed only if that expenditure is covered by A, B or C. To start the business or to expand the business, these expenses are incurred, only then these expenditures will be allowed under section 35D. 35D. So tell me, are you starting a business? Assessee, are you starting a business? Or you already have started the business, now you are expanding the business. To start the business or to expand the business, for the starting or for expanding, certain preliminary expenditures are incurred. Which preliminary expenditure? All preliminary? No, only these. These are eligible. Add all these preliminary expenditure. These preliminary expenditures will be allowed to you. These are eligible. These will be allowed to you, subject to a maximum limit. Subject to a maximum. And what is the limit? 5% of cost of project, 5% of capital employed, whichever is higher, if the assessee is Indian company. And if the assessee is any non-corporate, resident assessee, then 5% of cost of project. This is the limit. So either the eligible preliminary expenditure or maximum amount, whichever is lower, that will be the amount of deduction, and that deduction will be available in 5 equal annual installments. So for example, the total amount eligible was 10 crores. How much? And the limit is only 8 crores. How much will be allowed? 10 crores or 8 crores? But that 8 crore will not be allowed fully. It will be allowed in 5 equal annual installment, starting from the year in which the business was commenced or the expansion was completed, as the case may be. 35D is done. Now come to 35 DDA, which talks about VRS compensation. So if you are an employer and some of your employees in the business or profession, they are taking voluntary retirement. So to those employees, you are going to pay VRS compensation? No. That VRS compensation is also your expense, which we will allow you as a deduction under section 35 DDA. But that will not be allowed fully. That will be allowed in 5 equal annual installments starting from the year in which such expenditure is incurred. Will you remember? This was your 35 DDA. Then come to 36. 30. Now this 36, no, very easy section. In 36, no, there are different expenses. So if I say section 36 is there, in section 36 subsection 1 is there. And in subsection 1, there are different clause. Clause 1 is there, clause 1b is there, clause 2 is there, clause 3 is there, clause 4 is there, clause 5. Different clauses are there. Now under each clause, a specific expense is given. Under each clause, a specific expense is given. If you have incurred those expenses, if you have incurred those which are specifically given in section 36(1), these specific expenses are also allowed as a deduction. Now one by one, we'll see the names. What are we doing, you know? Incomes minus expenses. So incomes, we know that which incomes are to be taxed, yes or no? So the expenses, meaning minus the expenses. What expenses you will minus? Section 30, section 31, section 32, section 35, section 35(AD). Then these expenses which are given in section 36, these expenses also you can take as a deduction. Number one, if you are an assessee, you are giving insurance premium to insurance company for the insurance policy of your stock. Then that will be allowed as a deduction from your business income. So take the insurance of your stock, pay the insurance premium, that insurance premium will be allowed as a deduction. 36(1) over. Now, if you are paying the insurance premium on your employees' medical insurance or group insurance or personal accident policy. So in your business or profession, employees are there? Yes. For those employees, mediclaim is taken. So you are paying medical insurance premium. For those employees, group insurance policy is taken. So you are paying the group insurance premium. For those employees, if personal accident policy is taken, so you are paying personal accident premium. Yes or no? Are you paying it for yourself or your employees who are working in your business? Or so that is also treated as your business expense, for which you are going to get the deduction. 36(1)(1)(b). Done. But remember, if you have paid the medical insurance premium for your employees, it will be allowed under section 36(1)(1)(b), only if it is paid by way of any mode other than cash. So for the payment of medical insurance premium, of your employee, there is one condition, that we are going to give you this deduction only if that premium on the medical insurance policy of your employees you have paid by way of any mode other than cash, only then it will be allowed as a deduction. Yes or no? Sir, in my business, can I pay the insurance premium for my stock and employees mediclaim only? No. You can pay the insurance premium of your building also, that you have already claimed under section 30. You can pay the insurance premium of your plant and machinery furniture also, that you have already claimed under section 31. Hello. And you can pay the premium of your Keyman's insurance, that you have already claimed at the time of doing Keyman insurance holder. Allowed. What will you remember? Section numbers. You will never be able to remember these section numbers. Remember the concept, no? Premium paid for building used in the business, already allowed under section 30. Allowed. Premium paid on policy taken for plant and machinery or furniture which was used in my business, allowed under section 31. You have already claimed the deduction. Premium paid on the Keyman insurance policy of my Keyman, no specific section, but it is a business expense, so it will be allowed by general deduction, section 37(1). Hello sir. So even that will be allowed. Getting my point? Sir, if the premium is paid for my business stock, it is also allowed. Sir, if the premium is paid for my employees mediclaim, their personal accident policy, their group insurance policy, then also it is allowed. Allowed due to different provisions. Getting my point? What will you remember? Provision or tax effect? What is the tax effect? Allowed. Take the deduction from your business income, whether the premium is for this policy, this policy, this policy, or this policy, or this policy. But remember, if you want to claim medical insurance premium of your employee, it will be allowed under the head PGBP only if it is paid by way of any mode other than done. Yes or no? Now whenever you will be solving the question in your P&L account, these premiums will be debited. Will you allow or will you disallow? Allow. Oh, are you allowed? No. So in your P&L account, if these premiums are debited under the head PGBP, they are allowed or not allowed? So you'll put a tick mark, allowed. Meaning from this profit, these premiums are reduced to get this profit. Allowed under the PGBP also. So no need to do any add or less, no effect will be given. Getting my point? Hello sir. But what if the premium is paid on personal life insurance policy of the businessman? Is it an expense related to business? For this you are going to get deduction under ATC. Why are you claiming this deduction under PGBP? So to calculate your net profit, if the life insurance premium is reduced, is it an allowable expense? No, disallow. Add it back. Getting my point? So how the effect will be given while solving the question, that I am going to show you. Don't worry about that. I am going to solve the question also. But first remember these tax effects. Will you? Section number, if possible, remember. Otherwise no need to remember the section numbers also. Getting my point? Next one. Tell me. 36(1)(2). If you are an assessee, you have employees in your business or profession. To these assessees, if you are giving bonus or commission, even that bonus or commission will be treated as your business expense. You can claim the deduction, but subject to 43B. Do you remember 43B? Payment basis. What basis? Certain expenses will be allowed under the head PGBP only on payment. You are an assessee following mercantile system of accounting. What method of accounting? Mercantile. So your PGBP will also be calculated on mercantile basis. All the incomes on mercantile basis. Deduction for expenses also on mercantile basis. But few expenses will be allowed only on payment basis, subject to 43B. This year you have to pay. Or you have to pay on or before the due date of filing ROI of this year. If you don't pay in this year or on or before the due date of filing ROI of this year, then these expenses cannot be claimed as a deduction from the business income of this year. We will allow you in the year in which you will actually pay, but not in this year. 43B. (43B) tells you that certain expenses which are given in 43B, even if you follow mercantile basis, will not be allowed on mercantile basis. They will be allowed only on. One of those expenses is bonus and commission, which you are going to claim now. Will you be getting the deduction for bonus or commission in this year's business income? Yes. Pay in this year. Take the deduction. Or pay in the next year, but on or before the due date of filing of ROI of this year, then also take the deduction in this year. But the return filing due date of this year is gone and it is still not paid. What will you do? As per 43B, it will be disallowed this year. You cannot reduce bonus and commission in this year. It will be disallowed. So add back to the profits. It will be allowed in the business income of that year in which it is actually paid and not this year. This year it is disallowed as per 43B. Will you remember? Yes or no? Now see, if an employee, his name is Ramu, he is also the shareholder of the company. He is also the, And if dividend was supposed to given to Ramu in the capacity of shareholder, in the capacity of, now if the company will give that dividend to the shareholder, the company is not going to get any deduction for that dividend. Why? Because dividend is not an expense for company, dividend is appropriation of profit. So company cannot take the deduction for that dividend as expense. But Ramu, who is the shareholder of the company, also happens to be the employee. So what the company does? Company says, Ramu, instead of taking this amount as dividend, take this amount in the form of bonus or commission. It will not have any effect for you. Why? Because anyways, if you would have got this amount in the form of dividend, it would have been taxable as your IFOs at normal rates. Yes or no? And now instead of giving you this dividend on the name of dividend, if we give you this dividend on the name of bonus or commission, still the amount is taxable for you at normal rate, but now it will be taxable under the head salary. So it will have no effect for you, whether you take this amount as a dividend or you take this amount as bonus or commission. But this poor company will get the deduction if we give you on the name of bonus or commission. No deduction for that bonus or commission will be available to the company, which is given by the company in lieu of dividend to that employee who happens to be the shareholder of the company. That type of bonus or commission will not be allowed, which is given in lieu of dividend. Getting my point? So only the bonus or commission given legitimately to the employees in the business or profession will be allowed as a deduction, but it will be allowed subject to only on payment basis. Yes or no? Now 36(1)(3). If the assessee is taking a loan for business or profession and the loan is taken from specified lender. Specified. Who is the specified lender? Public financial institution, state finance corporation, state industrial investment corporation, any scheduled bank or cooperative bank or any banking NBFC. You have to remember these names. So you are an assessee. You have taken a loan for business or profession from specified lender. On this loan, if you are going to give them interest, that is your interest on business loan, will be allowed under section 36(1)(3). This is your business expense. It will be allowed under section 36(1)(3), but it will be allowed subject to 43B, because the payment of interest is to be made to specified lender. Even if you are following mercantile system of accounting, this interest will not be allowed on due basis. No. This year interest, if you want to claim this year's interest as a deduction in this year, pay this interest in this year, or at least pay on or before the due date of filing ROI of this year. Only then this interest will be allowed as a deduction from your this year's business income. So what if this interest was not paid in this year and neither it was paid on or before the due date of filing ROI of this year? Then this interest will not be allowed. 43B will be attracted and it will be disallowed. It will be allowed in the year in which it is actually paid. From that year's business income it will be allowed. Why? Because this is an interest on business loan given to specified lenders. Government wants you to pay this interest. These people should get their money. These lenders should get their money on time. Hence this restriction is there. Now can you take your business loan from any other lender? Any? So any other lender other than? So still it is your business loan. Interest on that business loan is still your business expense. Will be allowed under section 36(1)(3). But now it is not subjected to 43B. Subjected to 43B is only this interest which is supposed to be paid to specified lender. Will you remember this? Hello? What if a lender is other than specified lender? From that lender you have taken loan, and on this business loan now the interest is payable to these lenders. It is still your business expense, for which you are going to get deduction under 36(1), 3. But this will not be allowed subject to 43B. This will be allowed based on method of accounting. If you are following mercantile system of accounting, it will be allowed on due basis. If you are following cash system of accounting, it will be allowed on payment basis, as the case may be. Will you remember this? Should I move ahead? Now tell me, any business loan you have taken, on that business loan, whatever interest is there, that interest is going to be allowed under section 36(1), 3. 36(1), 3. But wait, if you are going to take that deduction under 36(1), 3, then the deduction will be allowed subject to 43B, or it will not be allowed subject to 43B. That we have done. Now if I ask you that if I have taken a loan to buy an asset in my business, is it a business loan? Is it a business loan? Yes. For buying one asset in my business, I am taking a loan. That is my business loan only. On that business loan, whatever interest you will pay, starting from the date of borrowing till the date on which that asset is put to use, you will not claim that interest here, because that interest has already been capitalized. Hello sir. Interest from the date of borrowing till the date on which the asset was put to use, till that date, whatever interest was there, you have already added that interest as a capital expenditure to the cost of your asset. You cannot claim that interest here. That has already been part of your cost of asset. Yes or no? But any interest on that loan which you pay on or after the date on which the asset was put to use is not capitalized, is not added to the cost of asset. That is interest of revenue nature. That is, and that is interest on your business loan which you can claim here, subject to 43B or not subject to 43B. Getting my point? Hello sir. Can you take working capital loan? Even that will be allowed here, because working capital loan is a business loan. Can you take a short-term business loan? Can you take a long-term business loan? On any type of business loan, can you take a loan to pay your suppliers? Yes or no? Can you take a loan for any purpose in the business? Yes, any purpose in the business. The loan is used in the business. So that loan will become your business loan. That can be short term, that can be long term. Hello? That interest on that loan will be allowed under section 36(1), 3. Sometimes it is allowed subject to 43B, and sometimes it is allowed based on method of accounting. Done sir? Should I move ahead? Please check this part. Very difficult, no? I just explained this two parts. Yes or no? Now, let's move on to the next part. Yes. These all things, no, these are extra notes on interest. At home, sit properly and read the notes. These are extra, points to be considered while taking the deduction for interest. If those things are to be, considered relevant, I would definitely touch them. But if I am not touching them, means that my attention, my time is not required for that. Getting my point? Read those points at home. And if you are not understanding any point, just ask me. Okay? But whatever relevant things are there, I am touching everything possible. Getting my point? Now, let's come to the next one. Clause 3A. This is time pass. Just read it once at your home. What is this? Zero coupon bond. Have you heard about zero coupon bond? Yes. Zero coupon bonds will be issued by these entities. Either the entity is infrastructure capital company, infrastructure capital fund, scheduled bank or public sector bank. So who is the assessee? Assessee is infrastructure capital company, infrastructure capital fund, scheduled bank or public sector. These sections become relevant and these provisions become relevant when you are told to calculate the income of these type of assessees, which happens in CA final. Getting my point? But still it is there in your syllabus. So whatever I'll speak, just listen to me, and even if you are not understanding, this section is not that important. Understanding? So pay attention. Zero coupon bonds will be issued by these assessees. Now on these zero coupon bonds, what is the meaning of zero coupon bond? Issued at heavy discount and redeemed at par. Issued at heavy discount and redeemed at par. So what was the par value? What was the face value? 1000 rupees. What was the par value? 1000. Now will it be issued at 1000 or heavy discount? For example, it was issued for 700 rupees. So what is 700? Issue price. What is 700? Issue price. And right now the company, right now the assessee will take 700. But after some time, when the bonds will mature, at the time of maturity, at the time of redemption, will the company give the 700? Yes, the company will give 700 plus 300 extra, meaning 1000. Meaning the company is offering a discount. The issuer is offering a discount. Discount of how much? 300. Yes or no? That 300 for the investor, it is a benefit, because you are giving only 700 right now, and at the time of maturity how much you will get? 1000. 300. The discount offered by issuer is your benefit. For you that 300 will be your capital gain income. For you that 300 will be your capital gain income. But for the issuer that 300 is a loss, no? Loss on issue of what? Zero coupon bond. Discount on issue of zero coupon bond is a loss. So even that loss, even that discount will also be allowed as a deduction in the hands of issuer. But this discount will be allowed on a pro rata basis. On a pro rata basis over the life of the bond. So for example, the bonds were issued, date of issue and date of redemption. So date of issue was 1st of November 2024. So when the bonds are issued, tell me. Previous year 24-25. This is the date of issue. Now for example, if the bonds are issued for a period of 3 years, after 3 years they will mature. Yes or no? So that 3 years has to be counted from date of issue. So from the date of issue for 3 years, the bond will be in existence. After 3 years, the bonds will mature. So tell me, the date of redemption will be 1st of November 2027, 24 to 25, 25 to 26, 26 to 27. Yes or no? So can I say this 3 years is equal to life of the bond? Yes or no? What is the life of the bond? So the life of the bond will start from previous year and it will end in previous year 27, 28. So during the life of the bond, whatever previous years are there, during those previous year, the entire discount has to be spread. Got it, sir? So tell me, at how much the bonds were issued for? And at how much they will be redeemed? So what is the discount? That 300 is not given for a single year. That 300 is given for the life of the entire bond. Yes or no? Entire life of the bond. That 300 discount is given. So tell me, that 300 is given for the life of the bond, which is spread in 24 to. So how much life of the bond is there in 24-25? How much life of the bond is there in 25-26? 26, 27 and 27, 28. How many years? 3 into how many months? Out of 36 months, how many months are there in 24, 25? Can I say November to March? Hello? 5 months. How many months are there in previous year? 25, 26. 12 months. Previous year? 26, 27. Again 12 months. And in 27, 28, how much life? April to October. 7 months. 7 plus 5. 12. 12 plus 12. 12 plus 12. 36. So you have to spread your 36 months life in those previous years during which the life of the bond is spread. Yes or no? So entire life is 36 months. That 36 months is spread from 24, 25 to 27, 28. Few months are there in 25, 26, sorry 24, 25, 25, 26, 26, 27 and 27, 28. So this 300 rupees discount is for 36 months life. 300 rupees discount is for, and out of this 36 months life, how much life is there in 24, 25? How much life is there in 24, 25? So can I say 300 is for 36 months? Then how much is for 5 months? Calculate. Huh? 41 point. Out of 300, 41.67 discount will be claimed in 24, 25. Understood? Now pay attention. 300 divided by 36. How much life is there in 25, 26? 12 months into 12. 99 point. It will be 100 rupees. Yes or no? 100 in 26, 27 also. Because there also 12 months life is there. Yes or no? Now tell me, 300 divided by 36 into how much life in the last year? 7 months into 7. So 58.3 plus 41 point something was there, no? 41.37, 41.67, 41.67 plus last year was 58 point something. It is 100 only. And 100 in the second previous year, 100 in the third previous year. This way, entire 300 will be spread over the life of bond. This is the pro rata deduction for discount on zero coupon bonds. Will you remember? Hello sir. A small 2 marks MCQ can be asked. But unfortunately they don't ask questions on these concepts. Getting my point? But if it comes, it can come like this. Okay? Okay? Okay sir? 3613A done. Now coming to clause 4, clause 4A and 5. Most important sections. Most important. Are you an assessee? Are you an assessee?
Yes, sir.
In your business or profession, will you have employees? Assessee. Are you doing any business or profession? In your business or profession, will you have employees? So to those employees, whatever you will pay or for their benefit, whatever you will spend has to be your business expense. Yes or no? Sometimes you contribute to their RPF account or ASF account. Sometimes you contribute to their approved gratuity fund account. Sometimes you contribute to their NPS account. You are an employee, no? Huh? You are an employee, no? Still an employee. When will you think big? You were an employee till the time salary head was going on. Now you are in which head? At least for some time, try to consider yourself as an employer. You are an employer? Doing any business or profession? In your business or profession, employees will be there. So you are employee or you have employees? You have employees in your business or profession. Now you are liable to contribute to their RPF account. You are liable to contribute to their ASF account. So from your business income, from your pocket, Will you contribute to their ASF account, their RPF account? That contribution made by you in this year is your business expense. It will be fully allowed. 36(1)(4). It will be allowed to the employee, no? Or employer. Assessee, you are an employer contributing to your employees RPF account, employees ASF account, whatever contribution made by you is considered as your business expense. Claim that amount as a deduction subject to 43B. This year's contribution must happen in this year, or at least on or before the due date of filing ROI of this year. Only then this year's contribution will be allowed in this year. If this year's return filing due date is gone and you have not yet made the contribution for this year, then the contribution will not be allowed as a deduction, even if you are following the books on mercantile basis. Yes or no? It will be allowed as a deduction in the year in which you actually contributed. From that year's business income, now it will be allowed. This year it will be disallowed under section 43B. Hello sir. Contribution to RPF, ASF. Now, can you contribute to your employees' gratuity fund? Gratuity fund is of two types. I am specifically talking about that gratuity fund which is approved. What? Approved. So if POGA was applicable, Payment of Gratuity Act. Do you remember Payment of Gratuity Act? And your employee is covered by POGA. So there is a requirement of the Gratuity Act that you will have to compulsorily create a gratuity account and get it approved. Hello. So you want or you don't want, there is no option. You will have to compulsorily, statutorily form a gratuity account for your employees, and in that gratuity account you will have to contribute. But before that, take the approval of that gratuity account, gratuity fund. Getting my point? So create a gratuity fund, get it approved, and now every year for your employees you are supposed to contribute in this fund. Now whenever your employees will retire, no, at that time, even if you don't have money, this fund will have enough money to pay them gratuity. So right now what is happening, just provisioning happening. You are keeping aside the money to pay the gratuity in future, so that whenever your employees will retire, at that time, even if your business is in losses, even if you don't have money, still that time your employees should get gratuity. And it will be possible only if you create a gratuity fund right now and keep on, contributing small amount, providing small amount in this gratuity fund. Getting my point? In future, after 5 years, 10 years, 15 years, whenever your employees will get retire, we want you to pay them gratuity. Anyhow you will have to pay. But that time you will say, oh, I don't have money. No problem. The gratuity fund is made for that only. Even if you don't have money, enough money will be saved in your gratuity fund, which will be used to pay the gratuity to your employees at that time. Am I talking about future or I am talking about current time? Current time, right now. Right now you are not supposed to pay gratuity. Right now you are just keeping aside some money in the gratuity fund. You are contributing some money in the gratuity fund of your employee to pay them gratuity in future. So whatever money which you are keeping aside right now, providing right now, keeping aside right now, by contributing in this fund will also be allowed as a deduction as your expense in this year only, subject to 43B. Clause number 5. So clause number 4, clause number 5, both are subjected to 43B, allowed only on payment basis. Sir, I have created a gratuity fund account for my employees. But sir, that was not approved, sir. It was unapproved. It was. Sir, in that unapproved gratuity fund I am contributing. Sir, in that unapproved gratuity fund I am contributing. Will you get any deduction? Will you get any deduction? Why? Because the contribution has to be made only in any contribution by the employer to unapproved gratuity fund. Sorry. Any contribution by the employer to unapproved gratuity fund. There is one section 40A subsection. Which section did I say? 40A subsection 7, which specifically disallows that if you contribute any sum during the previous year to unapproved gratuity fund of your employee, it will not be allowed as a deduction, it will be disallowed. 40A 7. But if you contribute to approved gratuity fund, then there is no specific disallowance. There is a specific allowance which says that even this will be considered as your business expense and we will allow it in the same year, subject to 43B. Will you remember this? Now tell me one thing. If I say that in the previous year 24-25, contribution to RPF account or ASAF account of employees. So who is this? This is assessee. This is assessee. This assessee can be any person. This assessee can be. Now this person is contributing. This person is contributing to his employees RPF account or ASF. For this person, this contribution is expense. It will be allowed under section 35 subsection 1 clause 4. Now the contribution is made to gratuity fund. Which fund? And if the gratuity fund is approved, then the expense, then the contribution will be considered as expense, will be allowed under section 36 subsection 1 clause 5. Yes or no? Now if the gratuity fund was unapproved, then this contribution will not be treated as your business expense. It will be disallowed under section 40A 7. 40A. Now if the contribution is made to National Pension Scheme account of my employee, then this contribution to NPS of my employee is also treated as my expense, and this is also allowed as a deduction under clause 4A 36 subsection 1 clause 4A 36 subsection 1 clause 4A. It will be allowed. But remember, under clause 4A, the entire contribution will not be allowed. It will be allowed subject to maximum 14% of my employee's salary. Earlier this limit was 10%, but this year this limit has been increased to 14%. Will you remember? Hello sir. Sir, how much is the deduction? Approved superannuation fund and RPF, full amount will be allowed, provided it is paid in this year or on or before the due date of filing ROI. Meaning that these two payments will be allowed subject to 43B. These two payments. Yes or no? There is no 43B applicability for NPS contribution. Actual contribution in this year will be allowed in this year. Actual contribution in next year will be allowed in next year. Actual contribution in next to next year will be allowed in next to next year. Yes or no? Keep on contributing and keep on taking the deduction. Yes or no? But wait. Tell me, for RPF and for gratuity fund, for approved gratuity fund, what is the maximum limit of contribution? Full amount. Whatever amount contributed in this year or on or before the due date of filing ROI of this year, whatever amount is contributed, that full amount will be allowed as a deduction, as your expense. There is no monetary limit. But if you will contribute to the NPS account of your employee, whatever amount you have contributed this year will be allowed, provided it is within the limit of 14% of your employee's salary. Your salary or your employee's salary? So your employee's basic and employee's DA in terms. Employee's basic and employee's DA in terms. For example, employee's basic and employee's DA in terms was 10 lakhs. How much? So 14% of that will be 1.4 lakhs. Can I say 1,40,000? So how much maximum you can contribute in this year? How much maximum you can contribute in this year? You contributed 1,20,000 only. Will that entire 1,20,000 be allowed? Yes, because your entire contribution is within the limit of 14%. Yes or no? But if you have contributed 1,80,000, have you contributed up to 14% or more than that? How much more? Was it required? So any amount which you contribute for your employees in statutory funds, over and above the required amounts, over and above the is also disallowed as per section 40A(9). Bloody, I am covering disallowances also. Getting my point? And now wait, one more thing I will tell you. Any amount to those funds which are non-statutory funds, which are no law has told you to make any fund or scheme for your employee, and still you have created that fund or scheme for your employee and you are contributing to those funds. Is it required under any law? So these funds, these schemes are non-statutory funds, non-statutory schemes. So any fund which is created on the name of your employee, you are trying to make us emotional. We are contributing to our employees' funds. These are all crocodile tears. We know who you are. Trying to become over smart. Huh? Employees picnic fund you have created. Ayyo. Employees children education fund or scheme you have created. Wow, wonderful. Claps. What fund? Employees picnic fund. Employees children education fund or scheme. And now taking the name of employees, you have created this fund, this scheme, this fund, this scheme. Tell me which law tells you to make this kind of fund or scheme? There is no law in India which compels you to create such kind of fund or scheme. So this was all your imagination. You have yourself created these funds by taking the name of your employees, that you are forming this fund for your employees. You are forming this scheme for your employees. Now what are you going to do? Your business profits on which you are supposed to pay tax, by taking the name of your employees, you are transferring these amounts to different funds on the name of your employees and coming to us to take the deduction. Now your profits which you are transferring to these type of funds, if we allow you as a deduction right now, then what is the guarantee that the amount which you are transferring to these funds or scheme will be later on used for the benefit of the employees? And what if that amount later on, if you are not using, there is no law in India which will take actions against you, and employees do not have any statutory right to get the money from these funds or schemes because there is no law. And by taking the name of your employees, you are going to take the deduction from us right now. What do you consider us? We are fools or what? No. The fund was not required statutorily. The scheme was not required statutorily. Meaning the funds and schemes are non-statutory. Funds and schemes are any contribution to such non-statutory funds or schemes of your employee in this year, we will not allow as a deduction 40A9. And even to the statutory funds, statutory schemes like NPS, contribute whatever is required. How much is required? Anything over and above that, were you required to contribute? No, we will not allow that also. That will also be disallowed. So how much you contribute? 1,40,000. 1 lakh. That is statutory requirement. But you are contributing 1,80,000. Up to 140, we are going to give you the deduction. But over and above that, extra 40, we will disallow as per 40A9. Even if the fund was statutory. Even if the scheme was statutory. Got it, sir? So tell me, one thing, simple thing I am asking you. Who is this? Who is this? Assessee can be any person doing any business or profession. In the business or profession, employees are there? Yes or no? For employees, RPF account, RPF or ASF account is there. Now the assessee is contributing to RPF account, or will it be allowed as a deduction? Will it be allowed as a deduction? 36(1)(4) subject to 43B. Come on, tell me. Now for these employees, approved gratuity fund is created and the assessee is contributing in approved gratuity fund. Will it be allowed? Will it be allowed? Full amount will be allowed subject to 43B. But if the gratuity fund happens to be unapproved gratuity fund, then whatever contribution is made will not be considered as your business expense. Section 40A7 will be applicable. As per 40A7, this contribution will be disallowed. Yes or no? Yes or no? Now for your employees, NPS account was open. Which account was open? In that NPS account you are contributing. Will it be considered as your expense? Yes. Will it be allowed? Yes. Up to 14% of salary of your, this salary will take basic and DA in terms. Basic plus DA in terms amounting to 10 lakhs. 14% will be. So whatever you contribute up to 1,40,000 will be fully allowed. But if your contribution is more than 1,40,000, up to 1,40,000 will be allowed and excess will be disallowed. Excess will be under section 40A9. 40A9. Now tell me, any contribution for your employees, any fund or any scheme is created which is not required statutory, which is a non-statutory fund or scheme. Any contribution to these type of funds, 40A9, it will be disallowed. Will you remember this? Entire thing I have covered with disallowances also. Please remember this much, please. And remember 36(1)(4) and 36(1)(4)A. 36(1)(4) and 36(1)(5). RPF ASF, contribution to RPF ASF or contribution to approved gratuity fund, subjected to 43B. Subjected to 43. Yes or no? But contribution to NPS is not subjected to 43B. Yes or no? Now pay attention. One very important circular I am going to discuss with you. Now the circular which I am going to discuss is applicable for clause number 4 and clause number 5. See, whenever contributions are done, contributions to RPF, ASAF, yes or no, or approved gratuity fund. So to make this contribution, statutory due dates. What? Statutory due date is also there. Meaning the law which requires to which requires you to make this contribution, that law says the contribution should be made on or before this date. So the due date given in the law. Which law? The law which tells you to make this contribution. For example, PF law. For example, PF law or gratuity law. That law tells you to make this contribution. So in that law, a due date is given to make these contributions. Yes or no? That due date is known as? That due date is known as? And under the Income Tax Act, there is a due date of filing ROI. Under the Income Tax Act, there is a due date of filing what? ROI. Now my question is, both these contributions are given subject to what is the requirement of 43B? Payment basis. Payment should happen within the same year or on or before the statutory due date. On or before statutory due date or on or before the due date of filing your. What if the payment is not done on or before the due date of filing your ROI? Then only 43B will be attracted. Then only. Understood what I want to tell you? What if the payment is made after statutory due date but before ROI due date? Allowed? Or 43B attracted? Allowed. Statutory due date was 15th of June. 15th of? Wait. Previous year 24-25. Previous year. For this previous year, the contribution was to be done. For this previous year, the contribution was to be done. See, if the actual contribution is done in the same previous year 24-25 itself, yes or no? Or it can be done in the next previous year. Next previous year means 25-26. So it can be done. It can be done prior to due date of ROI or on or after due date of ROI. So tell me, if it is done prior to ROI or within the same year, then the contribution will be allowed. But if the contribution is done on or after due date of filing ROI, then here 43B will be attracted. So for 43B to be attracted, we check due date of filing. Due date of filing. Yes or no? If this due date is missed, only then 43B will be attracted and the payment will be disallowed. Getting my point? But sometimes what used to happen, that assessee used to miss statutory due date. Assessee used to miss. Payment is made after statutory due date. But that payment was well within the due date of ROI. Still some assessing officers were disallowing it. Attracting 43B. Disallowed. Why? Because you have missed statutory due date. Bloody statutory due date is missed. Will not empower you to apply 43B. 43B will be applied only if ROI due date is missed. Because nowhere in 43B it is required that I should make the payment prior to due date and also prior to my statutory due date. Yes or no? Now pay attention. I am giving some cases. Payment for 24-25. Made in 24-25. Deduction allowed or not allowed? Allowed. Very good. Payment for 24-25. Made in next year. Made in. Date of payment is 4th of June. 4th of. Wait. What is the date of payment? And now I am telling you, statutory due date was 15th June and due date of filing your ROI was 31st July. Next year, 31st July, that is the due date of filing your ROI. Next year, 15th June is the due date, statutory due date for making these payments for this year. Yes or no? So tell me, have you made the payment next year? Yes. What was the date of your payment? What was the date of your payment? 4 June. 4 June is prior to this also? Prior to this also. Deduction will be allowed or will be disallowed? Allowed. Very good. Understood, no? Now, payment is made on 19th of July. Payment is made after statutory due date. But is it made before the due date of ROI? 43B should not be attracted in such situations. CBDT circular. 43B gets attracted only if the payment is not made on or before the due date of filing ROI. Even if the statutory due date is missed and the payment is made on or before the due date of filing ROI, still that payment will be allowed under the Income Tax Act. 43B will not be attracted. Yes or no? So now tell me, what if the payment is made on 19th August? You missed the statutory due date and you also missed the ROI due date. 43B will be attracted. Now the contributions will not be allowed in this year. It will be allowed out of the business income of the next year because it is actually paid in next year. Getting my point? Hello? Now if you miss the statutory due dates, no, then you have to pay the penalty, fine, etc. as per that law. But that does not mean that the payment is going to be disallowed under Income Tax Act. Getting my point? 43B will be attracted. 43B will be attracted only if you miss the return filing due date on or before the due date of filing ROI, you have not made the payment. Yes or no? Should I move ahead? See the CBDT circular which I was saying, no? I have covered that CBDT circular. Okay, if you will read, and I have taken few examples also. Okay, the same examples which I gave you. Now pay attention. Are you an assessee? Any person? Now, you have employee in your business or profession. Are you going to give him salary? How much was his salary? 1 lakh. How much was his salary? Now, if you are contributing to his PF, his ASF, his pension scheme, different types of funds and schemes created for the benefit of employee. If you are contributing as an employer, that means your employee will also have to contribute. Hello? If you contribute, it is your expense. If you contribute, it is your expense. It may be allowed or may be disallowed also. Getting my point? If it is for unstatutory, non-statutory funds, etc., then it will be disallowed. But if it is for ASF, RPF, you are contributing from your pocket, then it is allowed as an expense for you. Now tell me, is your employee also liable to contribute to staff welfare funds and schemes? Is he also liable? So if you give him full salary and then tell him that Tambi, please contribute. Will he contribute? Entire 1 lakh he'll spend. So what you do? You don't give him full salary. Out of that salary, you deduct 10,000. Saying that this 10,000 should be your contribution to your fund. Yes or no? How much was his salary? Out of that, how much you deducted? Saying that this 10,000 is your contribution to your staff welfare fund, your PF, your ASF, your contribution should also go. So from your salary, I am deducting your contribution and I will contribute. Hello? Understood? From your salary, your contribution, I will deduct. I will deduct. And I will make that contribution. Is it my expense? Is it my expense? No, na. My expense will be extra. The amount which I will put separately from my pocket. That is my expense. Yes or no? Is it my expense? But don't you think this salary was my expense? How much was the salary? How much was the salary? Salary is my expense. Full 1 lakh. I will take the deduction of salary. 37,1. General deduction. How much salary I am giving? So how much is my expense? So under the head PGBP, from my business income, I will deduct 1 lakh. Salary. How much is his salary, which he will show taxable? Gross 1 lakh. So how much is the salary income for him? How much is the salary expense for me? How much taxable income he is showing? How much deduction I am claiming? But don't you think exchange is only 90,000? I am giving him only 90. Don't you think that 10,000 which I have deducted is still with me? But I have claimed the deduction of full 1 lakh. That 1 lakh which I have claimed as a deduction include this 10,000 which I have deducted. First of all, that 10,000 will be treated as my income under the head PGBP. So 1 lakh is my salary expense. It is my deduction. Out of that 1 lakh, have I retained 10,000? Yes or no? The 10,000 which I have retained, saying that it is your contribution, that 10,000 is my income, taxable under the head. But sir, I have retained it to be deposited in my employee's account. Then deposit and take the deduction. Deposit and take the, but till the time you will not deposit, how the bloody hell we give you this deduction? How much is your employee's salary? Out of that 1 lakh, how much you have deducted? First of all, the amount which you have deducted, that amount will be treated as your income. That amount is still with you. Now, if you contribute this amount to your employee's fund on or before the statutory due date of that fund, then that contribution will be treated as your expense, and that also will be allowed under section 36(1)(5). But first of all, the amount which you have deducted from your employee's salary, that amount will be treated as your income, and in the course of doing your business or profession you are getting this amount, so it will be taxable under the head PGBP. Now if you don't want this amount to be taxed forever in your hands, do one thing. This amount which you have deducted out of the salary of your employee, which he has shown his income and which you also have claimed as your deduction, first of all this amount will be treated as your income, and deposit this amount in the respective fund of your employee on or before the statutory due date of that fund, and claim the amount as deduction. How much you deducted? 10,000. First 10,000 is your income. And if this entire 10,000 you have deposited on or before the statutory due date of your employee's fund, then take the deduction of this 10,000 under 36(1)(4)(a). But the deduction will be available only if the amount is deposited on or the statutory due date of that fund. What if the statutory due date is missed and this amount is not deposited? Once this amount is made as your income, if you want to claim it as a deduction under this section, you cannot miss statutory due date. If you miss this statutory due date and you don't deposit on or before the statutory due date, now this amount will not be allowed as a deduction in this year also and in the subsequent years also, because 43B is not applicable here. If you want to claim it as a deduction, it will be allowed only in this year, provided you deposit that amount on or before the statutory due date. If you don't deposit on or before the statutory due date, then it will not be allowed as a deduction. Not even now, not even in later years, subsequent years. Sir, but I have deposited in the next year. But have you deposited on or before the due date? On or before the statutory due date? Not allowed, not allowed, not allowed. If deposit after the due date, whenever you deposit, this income will no more be allowed as a deduction. This will compel you to deposit the amount deducted from your employee's salary, to deposit that amount on time. If once this amount is disallowed, it is disallowed forever. Getting my point? 43B is not attracted here. 43B applicable only for clause number 4 and clause number 5. Just imagine if 43B is attracted here. What you will do, you know? You will deduct the money from your employee's salary. You will enjoy with that money for few years, and now all the enjoyment is done from employee's money. Now whenever you want to take that deduction, that year you will deposit and take the deduction. That poor employee will be thinking that the moment you have deducted, that year only you have deposited. But have you deposited in that year? No. You are playing with his money and you are breaking his trust. So it should not be allowed subject to payment basis. No. 43B should not be allowed. Yes or no? Will you remember all these things? So this was your clause number 5. 6 is not in your syllabus, so no need to do. 7 is bad debts. 7 is, see, any income which you have shown as your PGBP income. Are you following mercantile system? Tell me yes. Mercantile system. So if you follow mercantile system, this year's sale, whether it is a cash sales or it is a credit sale, if the sales belongs to this year, it will be taxable as your PGBP income for this year. Now don't you think that in your sales, cash sales is also there, credit sales is also there? Cash sales is your this year PGBP income. Credit sale is also this year's PGBP income. Why? Because you are following mercantile system of accounting. Now out of the total sales made in this year, 25 lakhs. How much? 25. Entire 25 lakhs you have treated as your PGBP income. 5 lakh was credit sales. 5 lakh was? Don't you think this 5 lakh is receivable? Receive. Have you treated this amount as your PGBP income? Have you treated this amount as your PGBP income? Yes, what if bad debt happens? I don't want to listen to accounting treatments. Talk in the terms of tax. See, first I will have doubt. If you make a sales of 5 lakhs, which is credit sales, what entry you will pass? Come on, tell me. Talk in the terms of accounts. What entry you will pass? Debtors account debit to, and this sales which you have shown is your credit sale. You have already considered. So whatever amount you have shown as your PGBP is appearing in your debtors. This debtor is nothing but your credit sales which you have already taxed under the head PGBP as your income. Yes or no? Now tell me, you have some doubt that these debtors will not pay you money. They have actually not paid, or you have a doubt? So you will create RDD. You will not get any deduction for that RDD because it is just your imagination. Bloody your imagination will be, full debtors are not going to give me money. If you don't want to pay tax on that amount, you will imagine as if full amount is doubtful. No, on your imagination basis, we are not going to give you any deduction. So if you create any reserves against this debtor, that does not mean that it is your actual loss. It is your anticipation, it is your imagination. We are not going to allow this amount as a deduction. This is disallowed because this is not real expense, this is imagination. This is not your real loss, this is your imagination. Real loss will happen when these debtors will finally tell you, I am not going to give you money. No. Can they tell you that we are not going to give you money? Do whatever you want. Now, anticipation, imagination or actual? Now actual bad debt are arising. Now can I say actual bad debt is out of the debtors? Debtors is out of the credit sales and it is already considered as your business income. The income which is considered to be a debt receivable is now becoming bad debt. Claim it as a deduction. 36(1)(7). But for that, the amount which is considered as bad debt right now should have been already considered as your PGBP income. So the amount which is already taxed under the head PGBP, out of that amount, if any amount is becoming actual bad debt, that actual bad debt is allowed as a deduction under clause 7. What is the condition? Simple. Write off in your P&L. That's it. No question will be asked. To that extent the debtors will also reduce, and to that extent the amount will be written off in the P&L. Will you remember this? So what entry will pass? Debit to P&L account. Hello? To RDD. If RDD was created, then to RDD, or if there was no RDD, then it will credited to debtors. Yes or no? So bad debt account debit to debtors or bad debt account debit to RDD. Getting my point? If that entry is passed and the bad debts are written off in your books, claim this bad debt as your deduction, because this is out of that income which is shown taxable under the head PGBP. If that income is not receivable, so it should not be taxable. Getting my point? How much was your income? 20 lakh cash sales, 5 lakhs credit sales. How much income you have shown? But out of that 5 lakh is not recoverable, it is becoming bad debt. So how much should be taxed? 20 lakhs, no. But how much you have shown? So to give the effect of 20 lakh, 5 lakh has to be taken as a deduction. Common sense. Nonsense. Understood? Now we'll continue from here tomorrow. And tomorrow we'll end this and we'll start capital gains. Till then, bye bye. Bye bye. Bye.